Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's Editor-in-Chief, Angie Lau. All right, let's kick it off with Australia, which is making moves towards clearer crypto regulations. Yes, this is happening. On Monday, the country's Treasury released a consultation paper for regulating digital asset platforms, which proposes that all crypto exchanges that have more than 5 million Australian US dollars, and if you're doing the math, we did it for you, that's about 3.15 million US dollars, that's right, in total assets, or more than 1,500 Australian dollars, about 950 US dollars of a client's assets, to secure a license. Okay, so there are regulatory rails here. Now, the deadline for the submission of feedback on the proposal is December 1st, and consultation for draft legislation will continue next year, with the draft legislation expected to be released in 2024. Now, what does this all mean? Okay, once approved, Australian crypto exchanges will have 12 months, that's a year, to transition to a licensed regime. Okay, so it's pretty clear there. Also on Monday, by the way, Brad Jones, Assistant Governor at Australia's Reserve Bank, outlined the central bank's views of a tokenized future in the country.
Our overarching position is that we remain open-minded as to the precise functional forms of digital money and supporting infrastructure that could best support the Australian economy in the future. The Bank and Treasury will publish a joint report around the middle of 2024 that will provide a stocktake on CBDC research in Australia and set out a roadmap for future milestones.
Meanwhile, in the US, that kind of regulatory direction seems kind of worlds away, but possible movement this week. The battle between the SEC and the industry pushing for spot Bitcoin ETFs could be nearing an end. That's what many investors and market participants are expecting after the Securities and Exchange Commission did not appeal a recent court ruling that found that the securities regulator was wrong to reject an application from Grayscale Investments. Now, the SEC denied Grayscale's proposal, if you'll remember, to convert its over-the-counter Bitcoin trust into a spot exchange-traded fund back in June of 2022. Now, in that same month, the company sued the US regulator, arguing that, hey, you can't do that. The SEC had already approved ETFs that contained Bitcoin futures, and that the decision violated the country's Administration Procedure Act. So, fast forward to today. In August this year, the District of Columbia Court of Appeals delivered a favorable verdict in favor of Grayscale. Now, the pivotal ruling here is seen to also chart the course for other financial heavyweights like BlackRock and Fidelity, waiting in the wings for the SEC's decision on their own spot Bitcoin ETF application. So, waiting with bated breath. Everyone is doing that, absolutely. Now, from future casting to, well, let's kind of review an ugly past here. We are now in the third week of the ongoing criminal trial of FTX founder Sam Bankman-Fried, or SBF, and many of his top executives now are testifying against him, so we're getting a lot of juicy testimony here. Now, this week it was FTX's former director of engineering, Nishad Singh. He claimed in his testimony that he was late in the game in finding out about the exchange's misuse of customer funds. However, that didn't apparently stop him from purchasing a $3.7 million US home, vacation home, by the way. Singh purchased the 10-acre vacation estate on Orcas Island in Washington State in October last year. Now, that was weeks after he claims he first learned about the 13 billion with a B US dollars in customer funds missing from the exchange, and just weeks before its collapse. Bloomberg reported the purchase was made possible thanks to a loan from FTX, which was wired to Singh in mid to late October of 2022. Singh is a key witness, by the way, for the government, and has been cooperating with them after pleading guilty to criminal charges, including fraud and political campaign violations in relation to the collapse of FTX. And if you were wondering, yes, he did. He forfeited the home as part of the plea agreement. Now, so far, the defense has struggled to poke holes in the prosecution's case against SBF, but did manage to see some success with Singh, whose memory remained hazy throughout questioning. Now, the defense is still weighing up the option to have Sam Bankman-Fried himself testify. So I think everybody's waiting for that one. The court will take a recess for 6 days, in which the prosecution expects to close on the Thursday that court returns. Now, the collapse of SBF's empire should have been a boon for its rival crypto exchanges, including Binance. But instead, we did see an existential shift happening across the industry. And for Binance, instead of benefiting from the demise of FTX, the world's biggest crypto exchange has really been battling headwinds of its own. Forkast's Kerry McMahon takes a deeper look into Binance and what lies ahead for its CEO, CZ.
Binance is everywhere and nowhere all at once. The global exchange sits within a Cayman Islands holding company and has no formal headquarters, a structure that's helped Binance skirt global regulations over the years. Binance is said to operate in over 100 countries, but only lists 45 on its website. In 2021, the United Kingdom's Financial Conduct Authority raised concerns about the exchange's ambiguous corporate structure, leading to the financial regulator revoking Binance's UK permissions earlier this year. The exchange also closed shop in Canada due to restrictions on stablecoin use, while withdrawing from several European countries like Germany, the Netherlands, and Austria due to registration issues. While it seems to be in shutdown mode in some parts of the West, it's a different story in the East. The exchange re-entered Japan and cleared the third stage of Dubai's 4-step licensing process. It's also no secret that global regulators have been honing in on Binance since FTX's collapse. In February, the New York Department of Financial Services ordered Binance's stablecoin partner Paxos to stop minting Binance USD, also known as BUSD. Later, US regulators filed charges against Binance and its CEO Changpeng Zhao for allegedly operating an illegal exchange, as well as violating federal and securities laws. In Australia, regulators have been investigating Binance's forward derivatives operations, while in France there's been an investigation into whether Binance carried out adequate money laundering checks and illegally advertised to consumers. Most recently, a congressional committee in Brazil recommended the indictment of Zhao and several other executives for running a financial pyramid scheme in the country. Binance isn't taking the accusations lightly, flashing the cash on lobbyists and lawyering up. Data from Open Secrets show that in the first 6 months of this year, Binance spent more than $1 million in lobbying in the US, which was almost as much as it spent on lobbying in all of 2022. As Binance flourished on legal support, it made cuts within its organisation. Just last month, Binance US eliminated around a third of its workforce. It's not only employees that Binance has lost in the last year. Several key partnerships have come to an end, including its relationships with Paxos, PaySafe, and Checkout.com. Binance's debit card programs have also halted, with MasterCard and Visa distancing itself from the exchange. But some partnerships are continuing to bloom, including plans to offer a stablecoin in Japan with Mitsubishi UFJ Financial and TrueUSD, also known as TUSD. Speaking to Forkast, Clara Medley of Keiko said Binance maintains around 50% of global volumes, which is down from a high of over 70% earlier this year. Despite the drop, Binance remains the largest crypto exchange in the world, but it poses the question, is it still too big to fail? Jacob Joseph of digital asset data firm CC Data told Forkast, should Binance fail, it would deliver a substantial blow to the industry and could potentially dissuade both retail and institutional participants from actively engaging in crypto markets. This is also a perspective shared by PitchBook analyst Robert Lee. Lee said though there would be no government intervention if Binance were to fail, he expects other exchanges such as Coinbase, OKX and Bybit to eventually fill the vacuum. Binance didn't respond to Forkast's request for an interview on this story. For Forkast, I'm Carrie McMacken.
All right, speaking of Binance, its re-entry into the Japanese market is seen to have complicated the lives of smaller crypto firms in the country. Binance Japan started its operations on August 1st, offering 34 coins for trading. Now, while that might not seem like a lot in comparison to hundreds of coins on offer on Binance's global exchange, think about it this way, it dwarfs the coins available to trade on some of Japan's smaller exchanges, which can be as few as 1 coin on the entire platform. As of August 31st, there were 29 crypto exchanges registered with Japan's Financial Services Agency. And Justin Denigra of Tokyo-based Web3 services platform Crypto Garage told Forkast, there's an oversaturation in the number of retail crypto exchanges compared to the demand. Meanwhile, for Tetsuya Oku of Blockchain Collaborative Consortium, Binance's official entry into Japan had long been inevitable. He said he now hopes the arrival of the world's largest exchange will spark an influx of foreign interest in the nation's Web3 industry, in line with other jurisdictions like Dubai and Singapore, revitalizing the domestic market. All right, on that note, time for a quick break, but we're going to check in on the NFT markets when we come back. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Thanks for staying on with Forkast IQ. I am your host, Angie Lau. All right, New York's landmark store Macy's has stepped into Web3 right ahead of the festive season. On Wednesday, the company launched its new digital fashion platform called Mstylelab, which merges the physical and digital realms, allowing shoppers to pick up outfits from Macy's private label brand on 34th that they spot while walking through a virtual recreation of New York City. From the metaverse, let's get to NFT world next. Forkast Labs data analyst Yehudah Petscher joins in to talk about the big moves in NFT markets this week. How's it looking out there, Yehudah?
Hey, well, we're used to seeing really incredible headlines and innovations in NFTs. Let's take a look, and we'll start with the Forkast 500 NFT Index, which is perfectly reflecting the NFT market and really the loss of value that we're continuing to see in it. Weekly global NFT sales finished at just over $54 million, so no, we're not breaking that trend of declining sales, instead now extending it to the 8th consecutive week. Main factors impacting the market, well, it ranges from the conflict in the Middle East, which does impact the price of crypto and NFTs, and then you have traders' unwillingness to trade when the simple fact remains that there's just nothing out there that people want to buy at the prices, well, that those NFTs are still sitting at. Unique buyers and sellers both down significantly, falling to the lowest levels we've seen since July 2021. Somewhere we did see an increase, though, was in wash trading, with over $31 million in wash sales, up over 85% from the prior week. And we're seeing that increase after the Blur Marketplace announced that Season 2 of point reward farming will come to an end on November 20th. More importantly, though, a proposal came from Blur investors to begin charging a 1% marketplace fee on all trades. The money raised from these fees will be used to buy and burn Blur tokens, which would cut the supply. In theory, that's going to drive up the price of the token. That does bring concerns that traders may head for other platforms, though, whether that's back to OpenSea or to other marketplaces. So following the proposal, you saw speculators returning to wash trading on Blur, pushing it back to pre-Friendtech levels. Gaming NFTs, well, they continue to be one of the main narratives in NFTs this year. There's no one pioneering the NFT gaming space more than the creator of the Bored Ape Yacht Club, that's Yehudah Labs. Just 2 weeks ago, Yehudah Labs laid off employees, stating they would no longer create games in-house. Instead, they're looking to find third parties to build those gaming experiences for them, emphasizing the difficulty of delivering these experiences at the highest level, which that's exactly what people expect of Yehudah Labs. And showing just how difficult it is to maintain those expectations is Yehudah Labs' heavy metal game. Last week announcing the rewards that await players, in total, Yehudah Labs has 89,000 ApeCoin. That'll be split across the top 1,000 players, with the player at the top of the leaderboard winning 3,900 Ape. That's roughly $4,000. The community, though, not satisfied with that type of reward, especially coming from a Web3 native brand. Ultimately, Yehudah Labs heard that feedback, they buffed those rewards, adding an additional 150,000 ApeCoin to the reward pool, now giving that top player over 63,000 Ape. That's around $64,000. It's a nice buff. Now, there's an interesting takeaway here that I picked up on. That's that Yehudah Labs created a brand new X account to deliver these messages. That account is called Yehudah Labs Gaming. To me, makes it clear that Yehudah Labs doesn't want the negativity that comes with games and gamers' expectations to surround their core IP, the Bored Ape Yacht Club. So gaming, one of the most compelling use cases for NFTs, and another, maybe more significant, is digital art. Well, the NFT space saw a major milestone for digital and NFT art when the Museum of Modern Art acquired their first ever NFTs, welcoming Rafik Anadel's unsupervised machine learning into their permanent collection. Now, Rafik's art has been featured in the museum since last year, but now it's been given to the museum. But it sure does add even more credibility to the tech and to the movement when someone like MoMA welcomes it into their home. And NFT artists like Beeple, Rafik, and Xcopy, and so many others are showing the type of success artists and the collectors who are trading their art can now find on the blockchain. Exciting times all around the art world right now, and yes, it's being powered by the abundant creativity of these artists, but also at the core of it, NFTs. There's a beautiful thing happening on the blockchain right now.
Yehudah, thanks for the insights as always. Always good to see you. All right, let's take a quick break right now, and on the other side, we're going to head over to Dubai with our correspondent on the ground there in person to find out all about the future blockchain summit. Don't go anywhere.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
Welcome back to Forkast IQ. Okay, Dubai, center of the action this week as the who's who of the Web3 community got together at the Future Blockchain Summit. Not just that, Solana Foundation also announced its strategic partnership with Dubai Free Zone DMCC's Crypto Center. And our very own Forkast Maha Shah was at the Dubai Harbor to give us a peek into the mood, the buzz, and to lead conversations about the migration of crypto exchanges to the Middle East.
I'm here at the Dubai Future Blockchain Summit, and there's a growing interest from crypto companies to set up shop in the region.
The reason? Government support and focus on creating a Web3 ecosystem that's not only regulated, but one where the rules keep pace with the ever-changing dynamics of the Web3 industry. According to a report by Crypto Oasis, the United Arab Emirates houses more than 1,800 blockchain and crypto companies, 70% of which are homegrown. UAE has a population of 10 million, and 3.5 million of those people reside in Dubai, the financial heart of the country.
Dubai is basically a hub. It's a place where you meet the world. Crypto projects can meet the rest of the world through Dubai. If I look at new businesses coming in, like I mentioned, predominantly UK, India, China, US, Russia, they make up the maybe top 5% of nationalities.
Dubai's metaverse strategy outlines the country's ambitions of becoming a crypto hub by investing $4 billion and creating 40,000 new jobs by 2030. And that liquidity is attracting companies in droves.
Well, I think it's a really exciting time for VC funding here in the UAE. I think as funds are diversifying and growing, I think there's a lot more opportunity for global companies who have an interest in the Middle East to come here.
We actually set up a dedicated center called the DMCC Crypto Center. The DMCC Crypto Center is the ideal launchpad in the region for crypto businesses. So we provide all the services from business setup and regulatory support to access to funding, access to mentorship and acceleration.
For decades, Dubai has been a melting pot where the East and the West meet. And the city is owning up to its role of a responsible digital financial hub with VARA. Virtual Assets Regulatory Authority, or VARA, is responsible for regulating and supervising digital assets related activities in all free zones in Dubai except the Dubai International Financial Center.
Coinbase and other major players have announced that they're going to be applying for licenses here. And the reason is because Dubai has been progressive, putting out guidelines and policies about licenses to get. So all around the world, exchanges and other digital asset service providers are setting up second headquarters, or at least regional headquarters here.
We've always been an Australian-only exchange, but as I was mentioning earlier, with the difficulties and challenges around licensing and the time it's taken for that to come through to fruition, we're now actively looking to expand overseas. The benefit for Dubai is that they've gone for something very tailored, very specific.
UAE's crypto regulator is not hesitating from enforcing the rule of the land in its quest to build a stable digital assets ecosystem. Earlier this year, BitOasis, a regional crypto exchange, had its license suspended for non-compliance. And crypto bankruptcy claims exchange OPNX, which counts Three Arrows Capital's Suzu and Kyle Davies as its founders, was fined $2.7 million. In 2022, the UAE was added to the Financial Action Task Force, or FATF's, grey list. Since then, the Emirates has taken concrete steps to improve laws to tackle AML, or anti-money laundering, and counter-terrorist financing in an effort to get off the grey list in the review due April 24.
Banks, financial institutions, and all have raised quite a big of their bar in order to make sure that all those are getting are clean, on the money that are coming in are clean, and there is no facilitation for money laundering that would be happening in the region.
Gaming firms are also eyeing Dubai, and one of the country's largest free zone, DMCC, has set up a dedicated center to develop gaming businesses.
The gaming revenues actually decreased last year, but that is actually on the contrary for the Middle East, where gaming revenues actually rose by 5%. We foresee gaming revenues in the MENA to almost double by 2027 to reach $6 billion US, having a very high spend per capita on gaming, as well as the UAE being the 5th largest market globally for gaming influencers, and we all know the impact that influencers have.
Dubai has a long way to go before it can be a global crypto hub, but it's certainly making a strong case. Access to capital, growth markets such as India and Europe, and regulatory clarity are some of the reasons Web3 companies are flocking to Dubai. This is Maha Shah reporting from the Future Blockchain Summit.
All right, good stuff there, Maha. Appreciate that. Okay, we also caught up with Lou Kerner in Dubai. He's a man who dons many hats. He's a founder of Crypto Oracle, a Web3 advisory firm, and is also a partner at Blockchain Coin Investors. Welcome to the show, Lou. How's the crypto mood in Dubai?
I'm doubling down on Dubai because for me, it's all about community. And Dubai has an incredible community.
All right, let's move to markets here. This was interesting. Bitcoin hit 30,000 on Monday over mistaken reporting about BlackRock's spot ETF approval by Cointelegraph. A lot of people just kind of jumped on the news. And it kind of shows also the liquidity, pent-up demand waiting on the sidelines. But also this week in California, Governor Gavin Newsom signed a crypto licensing bill. What's your take on all of this news, these news headlines impacting prices here?
The spot ETF would obviously be positive for Bitcoin. For me though, I kind of find it comical that, we're doing this so that we can get away from institutions. And we're doing this so we can get away from politicians. And so for me, I really don't spend a lot of my time on politicians or institutions. Although any of those that are here to help, I welcome them with open arms.
Let's talk about altcoins. There was a buzz about Roblox accepting payments in XRP, which, by the way, Ripple has denied. Also rumors that X, formerly known as Twitter, we know this, X, I'm still getting used to that, by the way, would integrate Dogecoin into its crypto payment systems. What's your outlook on XRP and Doge?
XRP had a big court win recently. XRP also has a great community. The XRP army is super impressive. They're diehards. And, this is the kind of thing where, when it starts to work, they can start to add to that army. And it's the same thing to some degree with Doge. Doge is all about community. And I think we're moving into a world where people are going to want to be a part of communities like, Doge and like XRP. So I think both of them can be, in the early days of where they're going to be.
We have to discuss this one. It's a very sensitive topic, and a very concerning one. The Middle East crisis deepens with the ongoing Israel-Hamas war, and you're a member of Crypto Israel Fund. How do you see the use of crypto in war?
Crypto, can obviously be used potentially by both sides of a war. I think one of the more interesting things to come out of the war we're seeing now in the Middle East is the fact that Hamas stopped taking Bitcoin a few years back because Bitcoin is imminently traceable. You know, if it's something positive, you know, like giving to Ukraine, you know, Ukraine was able to raise millions of dollars in crypto before they were able to get any dollars in, because crypto is immediate. There's obviously lots of harm and damage and lots of people that need help. And so the crypto community, you know, has banded together to try and do what we can.
Lou, always appreciate it. Good to see you again. Thank you so much for joining us from Dubai. All right, well, that is a wrap on this week's show. Thanks for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching from home. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week. Forkast IQ, get intelligent in Web3.